Martin Gilbert, thank you so much for joining us at the PLSA's investment conference. We're living in interesting times, should we put it like that, geopolitically. We're hearing a lot of conversations around that. What are your views on how this industry mitigates for all of this?
Well, the interesting thing, I think, is, in view of our recent announcement of the merger with Standard Life, that it's pushing, I think, a lot of fund managers in the middle ground, shall we say, to becoming bigger. So the ideal is to be big or small, I think, and in order to serve our clients, we actually need to either be big or small, and that middle ground is a very difficult area to be in.
Indeed, I was going to ask you about the merger next, because obviously, has it not been a tumultuous year enough for you without a massive merger and becoming the largest firm in the UK now?
Yeah, no, look, for us, it's a really good transaction. To merge with Standard Life Investments is really, I think, going to do great things for our clients going forward. It makes us bigger. It allows us to have a broader range of products for pension funds, as we're here at this conference. So it's a very, very important strategic move for us.
What do you think companies need to do in this environment? You talked there about diversification of products and things. Is that the way forward? Diversity is a big topic at this conference.
Yeah, I mean, obviously diversification of products is becoming more important, and both for us and Standard Life Investments, we were both perceived wrongly as just having one product. So this allows us, I think, the combination to build scale in other products such as property, fixed income, alternatives. Having that diversification of products is going to be really important. Obviously, diversity is very important, and we're, like all the other fund management groups, really trying to push that. That's why the Returners program is so important for groups such as ourselves. Trying to get more, and I know diversity is not just about women, but trying to get more women in the management pipeline is really the challenge. Not at board level, because there seems a lot of good women who can serve on PLC boards, but it's definitely at that management executive team level that there's a lot more work to be done by fund management groups.
As well as diversity, what are the key attributes that investors need to have at the moment to succeed?
Well, I think we're very much focused on corporate governance, making sure that companies, I use the word behave properly, and especially in terms of remuneration. We want them to take a long-term view, and I think that's a very important aspect of investing going forward, really encouraging companies to get away from this quarterly reporting and taking a long-term view. Another thing we're trying to encourage the companies to do is, if they want us to take a long-term view on them, make sure that their pension funds take a long-term view on us. So it really is very much a circular argument. The companies employ the pension funds, who employ the managers who invest in the companies. So long-term is very important for us.
What do you think are the key questions and topics that will be debated at this conference? There are 900 pension professionals here. What are they going to be talking about most this week?
Well, I think we're still in this world of very low bond returns, and it's really when that cycle changes. I mean, I think we're much nearer now, obviously, in the US, and as I've said rather sort of cynically, Trump has achieved what the central banks have failed to do over 10 years. So, so I think we're getting to the stage now where that interest rate cycle changes, and that's the most important thing as far as measuring pension fund liabilities and what they invest in is for pension funds. Obviously, geopolitical events. We've got a lot of elections coming up in Europe. Especially the French election, if Marine Le Pen wins, and I think she can only win against a centre-left candidate, then all bets are off, really, if that happens.
I know in the past you've talked a lot about emerging markets and the possibilities there as well. What's your views on where the possibilities lie in the next year or so in terms of where that you might be able to find opportunity in this instability?
Yeah, well, I'm a great believer that America's going to do well, actually, under Trump, because I think he's just going to spend on infrastructure, defense. If that happens, the rest of the world tends to do well. So emerging markets will get their fair share of that growth. But we especially like India, probably Southeast Asia, like China, but difficult to find companies to invest in there. Mexico was good until the election. Brazil's had a very strong recovery. But I suppose if I was to choose one above all else, that above them all that does well, it would probably be India. Good companies there, good corporate governance in the companies. So they've got the Western management or developed country management with emerging market growth, and that's an ideal combination.
Martin, you're about to speak in a minute. What would you hope that the delegates that are here take away from what you've got to say?
I think above all else a long-term view, because it's difficult times for pension fund trustees at the moment. Here they are in this very low interest rate environment, all sitting on, unless they're lucky, pension fund deficits. So they really do need to take the long-term view and work out that interest rates will come back at some stage.
And also diversity, we've talked a lot about that, how important that is in uncertain times.
Yeah, I mean, having a diverse portfolio of assets, non-correlated assets, is very important. So we're seeing a lot of growth in diversified growth funds, alternatives, property. It's these real assets that we're seeing a lot more going into from pension funds.
And diversity of thinking, they're talking about being a challenger, not just somebody who's a herd investor.
Yeah, I think, and that's part of being long-term as well, I think, because inevitably if a fund manager is going to go against the trend, shall we say, and say buy emerging markets now, they're going to go through, they'll inevitably be too early. So you've got to not panic and cut at the point of maximum pain. But really ride out the cycles and have the courage to do so. I mean, if you think about it, we've been going through 4 years of emerging markets being out of fashion, and to hold them during that period has been very painful. But the one thing I always say is do not cut at the point of maximum pain.
Have the courage of your convictions.
Have the courage of your convictions.
Thanks so much for joining us, Martin.
Thank you.
Good to talk to you.
Thank you.